You start trading with a small account, and somewhere in your mind, there's a quiet belief you don't always admit out loud. You tell yourself that if you could just get one lucky run, one crazy move, one moment where price explodes in your favor, everything would change. You wouldn't have to struggle anymore. You wouldn't have to feel behind. You wouldn't have to question yourself. That belief sits there silently. It doesn't shout, it whispers. And that whisper keeps more traders stuck than any bad setup ever could. Because when you believe luck is the missing piece, you stop looking at your behavior. You stop looking at your habits. You stop looking at the choices you make every single day when nobody is watching. You wait, you hope, you pray for chance to save you. And chance never does. Here's the uncomfortable truth most people never want to face. Every trader you admire, every account that grew from small to massive, didn't rise because of luck. Not once. What looks like luck from the outside is almost always discipline repeated so many times that the result feels unfair to someone who never lived that way. You don't see the boredom. You don't see the restraint. You don't see the days where nothing happened and they still did the right thing. You only see the outcome and call it luck, because that's easier than admitting the gap is behavioral. You've probably felt this yourself. You've watched someone else catch a move and thought, why does this always happen to them and never to me? But what you didn't see was how many times they didn't trade, how many times they closed early, how many times they protected what little they had instead of swinging for something they wanted too soon. Luck is a story we tell ourselves to avoid responsibility. It feels lighter, it hurts less, but it keeps you small. Every result you have right now is built from the choices you repeat, not the big dramatic ones, the quiet ones, the ones you barely notice anymore. How you react after a loss, how you behave after a win, whether you follow your rules when you're tired, whether you walk away when you feel emotional. These are not exciting decisions. They don't give you a rush, but they shape everything. Most traders don't fail because they lack information. They fail because they are inconsistent humans trying to operate in an environment that punishes inconsistency instantly. The market doesn't care how badly you want it. It doesn't care how much pressure you're under. It doesn't care how unfair your past feels. It only responds to what you do, and it responds immediately. When you're waiting on luck, you trade differently. You take trades you shouldn't. You hold longer than you planned. You increase size when you're down because you want to be rescued. You break rules quietly and then act surprised when the damage shows up. But the damage didn't come from price. It came from you abandoning structure. Once you see this, truly see it, something starts to shift. You stop asking when your turn will come. You start asking who you need to become. That question changes everything, because now the focus isn't on outcomes you can't control. It's on behaviors you can. And that's where the real fight begins. Not with the market, with yourself. Because the moment you stop blaming luck, the noise inside gets louder. Fear steps forward. Greed raises its voice. Doubt starts asking questions. Hope starts lying to you. Impatience taps you on the shoulder. Revenge waits quietly for its turn. These things don't disappear just because you understand them. They show up stronger when you're trying to grow. You felt this internal war. You don't need me to explain it in theory. You've lived it. You've opened a trade and felt your chest tighten the second it went against you. You've watched price move without you and felt that panic that says, if I don't jump in now, I'll miss everything. You've taken profit too early because you were afraid it would disappear. You've held too long because you didn't want to accept being wrong. These reactions feel automatic, like they just happened to you. But here's the truth that changes the game. Those reactions are not random. They follow patterns, and patterns can be interrupted. Fear doesn't usually show up screaming. It shows up as hesitation. It makes you second guess entries you planned calmly hours earlier. It convinces you to wait just a little longer until the move is already gone. Then it flips instantly into regret. Fear doesn't protect you. It paralyzes you and then punishes you for being late. Greed is quieter than people think. It doesn't always scream for more. Sometimes it whispers, just this once. Break the rule. Just this once. Add a little size. Just this once. Don't take the profit. Greed doesn't look dangerous in the moment. It feels reasonable. That's why it's deadly. Doubt is the one that eats you slowly. It makes you question everything after the fact. You follow your plan and still lose. And doubt says, maybe the plan is broken. Maybe you're broken. Maybe you don't belong here. Doubt doesn't care about probabilities. It only cares about pain. Hope might be the most destructive emotion of all. Hope convinces you to stay when you should leave. Hope convinces you to ignore what price is telling you. Hope tells you stories about what could happen instead of accepting what is happening. Hope feels positive, but in trading it often becomes denial dressed up as optimism. And impatience. Impatience is the pressure you feel when nothing is happening. When you've been staring at the screen and you want action. You want to feel productive. You want to feel like you're moving forward. So you force trades. You manufacture opportunity. You confuse activity with progress. Revenge is what happens when pain turns into anger. When a loss doesn't just hurt financially, it hurts your identity. You feel disrespected. You feel like you need to get it back now. And in that moment, you're no longer trading. You're reacting. Every blown account has this story somewhere inside it. Not bad charts, not bad information, emotional decisions stacked on top of each other until the account couldn't breathe anymore. The shift happens when you stop trying to eliminate these emotions and start learning how to respond to them. Calm doesn't come from not feeling. Calm comes from having rules that speak louder than feelings. You start recognizing the signals in real time. That tight chest isn't a reason to exit early. It's a reminder to breathe and check your plan. That urge to jump in isn't intuition. It's impatience, asking for relief. That anger after a loss isn't strength. It's vulnerability, pretending to be power. When you learn to pause instead of react, something powerful happens. You create space. And in that space, you regain control. You don't need to be emotionless. You need to be rule driven. Once the inner noise starts to quiet, even just a little, you finally have room to build something solid. Not complicated, not fancy, simple, personal, bulletproof. Most traders never do this part properly. They copy strategies, they borrow rules, they follow other people's routines, and then they wonder why it doesn't hold up under pressure. A plan that isn't yours will always collapse when emotions rise because you don't believe in it deeply enough. Your roadmap doesn't need to impress anyone. It needs to protect you from yourself. It needs to answer questions before they come up. When do you trade? When do you stop? How much are you willing to lose in a day? What tells you you're done? Why you're doing this in the first place? Not motivational quotes, real reasons. Writing it down matters. Not because it looks professional, because it slows your thinking. It forces clarity. It removes excuses. A written rule can't be negotiated with the way a thought can. Your plan should feel boring, predictable, repetitive. That's how you know it's working. If every day feels dramatic, something is wrong. Progress in trading is quiet. It doesn't announce itself. You build non-negotiables. Rules you don't bend based on mood. You decide in advance how much pain you're willing to tolerate. You decide in advance what a good day looks like, even if you lose. You decide when you walk away to protect your mind, not just your money. And this is where everything starts to shift. Because once you have structure, Capital stops being something you gamble with and starts being something you guard. Protecting money doesn't feel exciting. It doesn't give you stories to tell, but it's the difference between surviving long enough to grow and disappearing quietly. Every dollar in your account is a soldier. You don't send them all into battle at once. You don't disrespect them by risking them emotionally. You start thinking in terms of survival first. You stop asking how much you can make and start asking how much you can afford to lose and still come back tomorrow clear headed. That mindset alone separates most people. You put limits on yourself because you understand something most don't. You are your own biggest threat, not the market, not brokers, not news. You, with protection in place, losses stop being the enemy. They become information, they become feedback, they become lessons instead of wounds. You learn how to look at a losing day without flinching. You review it honestly, not to punish yourself, to understand yourself. Was this a good loss or a bad one? Did you follow your rules? Did you break them? The difference matters more than the money. Good losses are the cost of doing business. Bad losses are tuition for ignoring discipline. When you can separate the two, guilt disappears, shame fades, growth accelerates. You build rituals around review, not emotional spirals. Simple questions, simple notes. What worked, what didn't, what you felt, what you'll adjust. You don't rush to trade again. You let the lessons settle. Over time, something strange happens. Losses stop shaking you. Wins stop intoxicating you. You become steadier, calmer, more reliable, and reliability compounds faster than excitement ever will. The long road is where most people give up, not because it's hard, because it's quiet, because progress is slow, because nobody claps for discipline, because consistency doesn't go viral. But this is where the real transformation happens. Day after day, showing up the same way, protecting energy, respecting limits, doing the boring work, even when nothing seems to change. You survive flat periods without panicking. You trust the process without forcing results. You compound behavior before you compound money. You stop chasing identity through trading and let trading reflect the identity you're building. Years pass like this, quietly, and one day you look back and realize something profound. You didn't just grow an account, you grew into someone different, someone calmer, someone patient, someone who doesn't need luck anymore. Because luck was never the key. You were, and the trader you become through this process is the real reward. You don't wake up one morning and suddenly feel like a different trader. There's no moment where everything clicks and the struggle disappears. What happens instead is quieter. You start noticing that things which used to shake you don't have the same power anymore. A red trade no longer ruins your mood for the day. A missed move doesn't make you chase the next one. A good win doesn't push you into doing something reckless. These are small shifts, but they are massive signs of growth. Most people think $1 million traders are fearless. They're not. Fear never leaves. What changes is how much authority it has. Early on, fear runs the room. It decides when you enter, when you exit, when you add, when you stop. Later, fear still speaks, but it no longer votes. Your rules do. Your preparation does. Your respect for capital does. This is where patience becomes something different than waiting. Waiting sounds passive, like you're sitting around hoping. But patience in trading is active. It's a decision you make again and again to not act when there's nothing to do. It's the discipline to stay flat when flat is the best position. It's the strength to end the day early because you've hit your limit, not because you're tired. You've probably experienced this moment. You sit there, everything is quiet, and a voice in your head says, you should be doing something. That voice isn't ambition, it's discomfort. It's your brain wanting stimulation. And if you obey it, you usually pay for it. Learning to sit with that discomfort without acting is one of the hardest skills in trading. And it's one of the most valuable. As time goes on, your relationship with money changes. Early on, every dollar feels heavy. Every loss feels personal. You measure your worth by your balance. That's a dangerous place to live because markets don't reward emotional attachment. They punish it. Gradually, money becomes something else. It becomes a tool, a resource, something you manage, not something that defines you. You stop counting what you could have made. You stop fantasizing about big days. You focus on clean execution, on process, on showing up the same way, whether you're up or down. This is when compounding really begins, not just in the account, but in your mindset. Small, consistent decisions stacking on top of each other. One good stop, one disciplined walk away. One day where you followed your rules, even though it hurt. These moments don't feel heroic, but they add up faster than any lucky streak ever will. There will be long stretches where nothing exciting happens, weeks where you're flat, months where progress feels slow. This is where most traders sabotage themselves. They assume something is wrong. They start tweaking, changing, searching, overtrading. But flat periods are not failure. They're part of the cycle. They're where discipline is tested. When you accept this, you stop fighting the rhythm of the market. You align with it. You let quiet periods be quiet. You let active periods unfold without forcing them. You stop trying to squeeze opportunity out of boredom. Protecting your energy becomes just as important as protecting your capital. You don't stare at screens all day. You don't obsess over every tick. You know when to step away. You know when your mind is tired. You respect that fatigue leads to mistakes, and mistakes cost money. This level of self-awareness doesn't come from reading. It comes from repetition, from making the same mistake enough times to finally decide you're done paying for it, from choosing long-term peace over short-term excitement. Eventually, people start to notice something about you. You're calmer, more measured. You don't react the way you used to. You don't talk in extremes. You don't chase. You don't complain as much. You don't need to prove anything. That confidence isn't loud. It's grounded. And this is where the idea of legacy starts to form, not in terms of money alone, but in terms of who you become. Trading stops being about escape. It becomes about mastery. Mastery of self first. The market comes second. You realize that the person who can turn a small account into a large one is the same person who can sustain it. The habits are identical. The discipline is identical. The respect for risk is identical. The only difference is time. Time rewards consistency. It punishes impatience. It magnifies behavior. That's why some people blow up fast and others grow quietly. The market doesn't choose favorites. It reflects you back to yourself. And one day, without drama, without announcement, you cross a line. You're no longer trading to feel something. You're trading because it's what you do. It's part of your routine, part of your discipline, part of your identity. You no longer need motivation. You have commitment. You no longer rely on hope. You rely on structure. You no longer fear losses. You respect them. You no longer chase wins. You allow them. That's the mindset that turns small traders into large ones. Not aggression, not luck, not intelligence alone, calm repetition, emotional control, deep respect for risk, and the willingness to walk the long road without needing constant proof that it's working. When you reach this point, money becomes a byproduct, not the goal. The real success is who you had to become to get there. And once you become that person, the numbers eventually follow, quietly, consistently. Inevitably, there's another layer to this that most people never talk about because it doesn't sound exciting and it doesn't sell dreams. The truth is, the mindset that grows small accounts isn't built during winning streaks. It's built in the days where nothing works the way you expected. It's built when you do everything right and still end the day down. Those moments decide who you become. You've had days like that. You followed your rules. You waited. You were patient. You took only what fit your plan. And still, the result wasn't what you wanted. That's where many traders quietly break. Not loudly, not dramatically. They don't rage or smash anything. They just start bending rules the next day. They lose faith in discipline because it didn't pay immediately. This is where maturity shows up. You learn to separate outcome from execution. You stop asking, did I make money today? And start asking, did I act like the trader I'm trying to become? That shift sounds small, but it changes how deeply losses cut. Because now, a loss doesn't mean you failed. It means you participated correctly in a process that doesn't reward every effort instantly. Most people quit here. They don't quit trading completely. They quit the idea of becoming disciplined. They go back to gambling, back to hoping, back to emotional decisions. And they stay stuck not because they're incapable, but because they never learned how to sit with delayed gratification. Delayed gratification is the real edge, the ability to do the right thing now for a payoff you can't see yet, to protect capital today so you can still be here next year, to trade small even when you feel capable of more, to slow down when everything in you wants to speed up. You stop trying to impress the market. You stop trying to prove something to yourself. You don't need big wins to feel valid anymore. You don't need constant confirmation. You trust your preparation, and trust only comes from repetition. This is where your rules stop feeling restrictive and start feeling freeing. Early on, rules feel like chains, like limitations, like they're holding you back from what you could make. Later, you realize rules are what give you peace. They remove decision fatigue. They remove emotional bargaining. They give you clarity on bad days and stability on good ones. You know exactly when you're done for the day. You know exactly what disqualifies a trade. You know exactly how much pain is acceptable. There's no debate, no arguing with yourself, and that mental quiet is priceless. You also start seeing patterns in yourself that have nothing to do with charts. You notice that certain emotions show up at certain times. You notice that tired days lead to sloppy decisions. You notice that stress outside the market leaks into your trading if you don't respect it. This awareness is what turns trading into a mirror. Instead of blaming external factors, you adjust internally. You trade less when your mind isn't clear. You take breaks without guilt. You understand that rest is not laziness, it's maintenance. And maintenance is part of longevity. Longevity is the real goal, whether you realize it or not. Anyone can get lucky for a week. Anyone can have a hot month. Very few people can stay consistent year after year. And consistency is what compounds, not excitement. You stop measuring progress in dollars alone. You measure it in fewer mistakes, in calmer reactions, in faster recovery after losses, in how quickly you return to neutral. Those are real gains, and they usually come before financial ones. At some point, you stop talking about trading as much, not because you're hiding something, but because you don't need validation anymore. You don't need to explain yourself. You're too focused on execution, on routine, on showing up the same way, regardless of mood. This is when confidence becomes real. Not loud confidence, not forced confidence, quiet confidence, the kind that doesn't need to be defended, the kind that doesn't collapse after a bad week, the kind that's built on evidence, not hope. You've seen traders who talk big but fall apart under pressure. And you've seen traders who say very little but always seem steady. That steadiness isn't talent, it's discipline lived over time. The market starts to feel less like an enemy and more like an environment, something you operate within, not fight against. You stop trying to bend it to your will. You adapt, you respond, you respect it. And when you respect the market, it stops punishing you as harshly. Not because it's kind, but because you've stopped putting yourself in vulnerable positions, emotionally and financially. You're no longer desperate for growth. You're committed to process. And process, when protected long enough, produces results, whether you rush it or not. There will still be hard periods. There will still be drawdowns. There will still be moments of doubt. The difference is those moments no longer define you. They pass through instead of taking over. You don't spiral. You don't self-destruct. You adjust and continue. This is the mindset shift most people never make. They want certainty. Trading doesn't offer that. What it offers is opportunity for those who can live with uncertainty without needing to react to it. You become comfortable not knowing what the next trade will do because you know who you will be regardless. Disciplined, calm, protective, patient. That identity is what carries you forward. Not one big win, not one perfect setup, not one lucky streak. Identity outlasts outcomes. And when identity is solid, growth becomes almost boring, predictable, slow, steady, exactly the way real wealth is built. You don't feel like you're chasing a dream anymore. You feel like you're fulfilling a responsibility to yourself to do this the right way, to respect the craft, to respect your future. That's how small accounts grow. That's how traders last. That's how consistency turns into scale over time. Not with noise, not with rush, but with calm commitment, repeated until it becomes who you are. There comes a point where you stop asking the market to give you something and start asking yourself what you're willing to give. Not money, effort, consistency, restraint, time. Most people want results without transformation. Trading doesn't work that way. It asks for a version of you that can handle responsibility before it hands you reward. This is where discipline deepens, not the kind that's fueled by motivation. Motivation fades. This is discipline rooted in identity. You don't follow your rules because you feel inspired. You follow them because breaking them would feel out of character. It would feel wrong, like betraying yourself. You start to notice how small lapses matter. One impulsive trade, one ignored limit, one emotional decision. Not because it destroys everything instantly, but because it opens the door. And once that door is open, it's easier to walk through it again. So you close it firmly, not out of fear, out of respect. Respect for the process, respect for your capital, respect for the future version of you that's counting on today's decisions. This is also where you learn to let go of comparison. Early on, you watch others constantly. You measure yourself against their wins, their progress, their timelines, and it poisons you slowly because you never see the full picture. You only see highlights, and highlights create pressure. Pressure leads to shortcuts. Shortcuts lead to mistakes. Eventually, you understand that your path doesn't need to look like anyone else's. Your pace doesn't need to match theirs. You stop rushing milestones. You stop chasing numbers. You focus on staying clean, staying disciplined, staying alive in the market. Alive means you can show up tomorrow. Alive means your account still has room to breathe. Alive means your mind isn't fractured by regret or anger. You learn how powerful it is to end the day early, not because you're forced to, but because you chose to, because you hit your limit, because you did what you came to do. That choice builds confidence faster than squeezing out one more trade ever could. There's a maturity in knowing when enough is enough. Most people don't have it. They always want more trades, more risk, more excitement. And that hunger never gets satisfied. It only grows. You learn to be satisfied with execution, not outcome. That's a radical shift. It takes time, it takes repetition, it takes pain, but once it clicks, everything gets lighter. Losses don't linger as long, wins don't inflate your ego. You return to neutral faster, and neutrality is where clarity lives. You also start understanding the importance of simplicity, not adding more rules, not adding more complexity, stripping things down, removing anything that creates confusion or temptation. The cleaner your process, the harder it is to self sabotage. You stop overthinking. You stop analyzing everything to death. You know what you're waiting for. You know what disqualifies it. You don't argue with yourself anymore. You either act or you don't, and both are acceptable outcomes. This clarity spills into other areas of your life. You become more decisive, more patient, less reactive. You don't chase as much. You don't force as much. You let things develop. That's when trading stops being a source of constant stress and starts becoming a practice, something you respect, something you approach calmly, something you don't abuse. The idea of getting rich quick loses its appeal, not because you don't want wealth, but because you understand the cost of rushing. You've paid it before, and you don't want to pay it again. You've learned that every shortcut has a price, and the market always collects. Now, your focus is durability. Can you do this tomorrow, next month, next year? Can you show up the same way when you're tired, when you're bored, when you're up, when you're down? That's the real test. Durability is built in quiet moments, in the trades you don't take, in the days you walk away, in the losses you accept without reaction, in the wins you don't over celebrate. This is where consistency starts to feel natural, not forced, not strained, just normal, like brushing your teeth, like showing up to work. It's not exciting, but it's effective. You no longer need external reassurance. You don't need someone to tell you you're doing well. You can see it in your behavior. You can feel it in your calm. You can measure it in how little drama there is in your trading. Drama is expensive. Calm is profitable. And this calm doesn't mean you don't care. It means you care enough to protect yourself, to think long term, to trade in a way that aligns with the future you want, not the impulse of the moment. This is how small accounts grow without blowing up. This is how traders last long enough for compounding to work. This is how discipline turns into scale. Not by pushing harder, but by becoming steadier. And steadiness over time does what force never can. Eventually, you realize something that changes how you move forever. You were never really trying to beat the market. You were trying to outrun your own impatience. You were trying to escape discomfort. You were trying to compress time. And the market doesn't reward any of that. The market rewards people who respect time, time to learn, time to mature, time to repeat the same disciplined actions until they stop feeling like effort and start feeling like identity. This is where the long road becomes clear, not as a punishment, but as a filter. The road is long because it's designed to shake off people who want shortcuts. It's long because only those who can live with slow progress deserve fast growth later. It's long because stability has to be earned. You stop asking how long it will take. That question fades away. Not because you don't care about results, but because you understand the answer doesn't change how you need to behave today. Today still requires patience. Today still requires discipline. Today still requires respect for risk. So you focus on today. You focus on doing one day right, one session clean, one decision aligned. You stop trying to win the year in a week. You stop trying to force the future into the present. You let it unfold. This is where many people misunderstand consistency. They think consistency means winning often. It doesn't. Consistency means behaving the same way regardless of outcome, following the same rules on good days and bad days, showing up with the same mindset when you're confident and when you're unsure. Consistency is emotional stability under pressure. You learn how to survive flat periods without losing your mind. Those stretches where nothing seems to grow, where the account barely moves, where motivation dips, where doubt whispers again. This is where identity matters most. Because if your identity is tied to constant progress, flat periods will break you. But if your identity is tied to discipline, flat periods become maintenance. You don't quit during these times. You don't overhaul everything. You tighten execution. You reduce risk if needed. You protect energy. You remind yourself that stagnation is not regression, it's consolidation. You also learn to protect your life outside trading. This matters more than people admit. Burnout leads to mistakes. Obsession clouds judgment. Staring at screens all day doesn't make you better. It makes you tired. You step away when you're done. You live. You rest. You give your mind space to reset. And when you come back, you're clearer, sharper, calmer. That balance is not weakness. It's professionalism. Over the years, something solid forms underneath everything. A deep trust in yourself, not arrogance, trust. You trust that you will follow your rules. You trust that you will stop when you should. You trust that you will survive drawdowns without self-destructing. That trust is powerful. It removes fear, not because losses disappear, but because you know you can handle them. You know you won't spiral. You know you won't revenge trade. You know you won't abandon your process in a moment of emotion. This is what allows size to increase safely over time, not confidence. Trust. Confidence can be fragile. Trust is earned. As your account grows, the mindset doesn't change. That's the part most people get wrong. They think the mindset of a small account is different from the mindset of a large one. It's not. The rules are the same. The discipline is the same. The respect for risk is the same. Only the numbers change. The trader who can't protect a small account will never protect a large one. The trader who overtrades $100 will overtrade $1 million. Behavior scales. So does damage. That's why the transformation has to happen early. While the numbers are small, while mistakes are cheap, while lessons don't cost everything, you start seeing your early struggles differently. Not as failures, but as training, as preparation, as proof that you're being shaped, not rejected. The market isn't pushing you away. It's testing whether you're willing to change. Most people aren't. They want the reward without the refinement. They want the lifestyle without the discipline. They want the outcome without the identity shift. And they quietly exit when they realize the cost. But if you stay, if you commit to the process, even when it's boring, even when it's slow, even when nobody notices, something inevitable happens. You compound, not overnight, not explosively, steadily, predictably, safely. Your account grows because your mistakes shrink. Your drawdowns become manageable. Your confidence becomes quiet. Your decisions become boring. And boring in trading is beautiful. You no longer feel like you're chasing something. You feel grounded, centered, capable. You know who you are when you trade. You know what you will and won't do. And that clarity is worth more than any single win. This is what separates those who last from those who disappear. Not talent, not intelligence, not luck, but the willingness to walk the long road without cutting corners. And at the end of that road, you don't just arrive with a bigger account. You arrive as someone different, someone disciplined, someone patient, someone resilient, someone calm under pressure, someone who can be trusted with more. That is the mindset that turns a small trader into a large one. And once you have it, nothing in the market can take it from you. There's a quiet moment that comes much later, long after the excitement is gone, long after the frustration has softened, where you finally understand what this journey was really about. It was never about proving anything to the market. It was about proving something to yourself. You stop needing the market to validate you. You don't need a big win to feel capable. You don't need a green day to feel confident. Your confidence isn't tied to what just happened. It's tied to how you showed up. And that kind of confidence doesn't shake easily. You've learned how to be alone with your decisions. That's not easy. Most people need noise. They need opinions. They need reassurance. They need someone else to blame when things go wrong. But you've learned how to stand on your own process. When a trade works, you don't get carried away. When it doesn't, you don't collapse. You stay balanced. That balance didn't come from talent. It came from repetition, from choosing discipline when it was uncomfortable, from choosing restraint when you wanted excitement, from choosing patience when you wanted progress faster than it was willing to come. You've also learned humility, real humility, not pretending to be small, but knowing that the market is bigger than you and that your job isn't to conquer it. Your job is to operate within it responsibly. That understanding keeps you alive. You don't argue with the market anymore. You don't try to bend it to your will. You accept what it offers and ignore what it doesn't. That acceptance removes friction. And when friction is gone, clarity appears. You start trusting silence. You're not uncomfortable when nothing is happening. You don't feel the urge to force action. You understand that waiting is part of the work. That stillness is not wasted time. It's preparation. Your daily routine becomes simple, predictable, almost boring. And that's exactly why it works. You're not constantly changing. You're not reinventing yourself every week. You're refining. Small adjustments, small improvements, nothing dramatic, nothing rushed. This is where compounding becomes undeniable. Not because you're doing something extraordinary, but because you stop doing destructive things. You're no longer leaking money through emotion. You're no longer giving back gains through impulse. You're no longer sabotaging yourself out of boredom or frustration. You've learned how to protect your downside. And once the downside is protected, the upside takes care of itself over time. You don't feel pressure to trade every day. You don't feel pressure to make something happen. You feel responsible, not desperate. That difference changes how you see opportunity. You wait for alignment instead of chasing movement. And because you're no longer chasing, you see things more clearly. You notice when conditions aren't right. You notice when your mind isn't right. You step back without guilt. You understand that not trading is also a decision, often the best one. The version of you that started this journey wouldn't recognize you now. Not because you're louder or more confident on the surface, but because you're steadier inside. Your reactions are slower. Your thinking is clearer. Your emotions don't run the show anymore. You've built something most people never do: self-trust. And self-trust is what allows responsibility to increase. It's what allows size to increase. It's what allows pressure to increase without breaking you. Because pressure only crushes what's hollow. You've built something solid. You no longer see losses as threats. They're part of the landscape. You no longer see wins as proof of worth. They're confirmation that discipline works over time. Everything has found its place. You understand now why so few people make it. Not because the market is cruel, but because the process demands patience in a world addicted to speed. It demands restraint in a culture that celebrates excess. It demands self-control in moments where emotion feels justified. Most people don't want that transformation. They want results without change. And trading doesn't allow that. But if you've stayed, if you've done the work quietly, if you've respected the process even when it felt unrewarding, you've already separated yourself from the majority. The account size is just a reflection. The real achievement is the mindset you've built, a mindset that doesn't panic, a mindset that doesn't rush, a mindset that doesn't need luck. because you no longer rely on chance. You rely on behavior. You rely on structure. You rely on who you've become. And that's why small accounts grow under your care. That's why capital is safe with you. That's why time works in your favor instead of against you. You didn't force this outcome. You earned it quietly, patiently, one disciplined decision at a time.